Whichever way you cut it, the cost of doing business is rising, and this grocer knows it.
We pay for it in like how we water our vegetables. So all our pumps, even our cool rooms, they all operate on diesel. So, and yet...
It's been hurting?
Of course, yeah.
Do you pass the costs on to your customers?
Yeah, I put extra $1.
Where do you find the hip pocket pain?
Actually, food.
Food is so expensive.
Everything costs more, you just got to cop it.
Annual inflation fell from 4.6 to 4.2% in April, but the measure the RBA watches closely that strips out the most volatile price moves nudged up. As energy rebates ended, power prices surged. Rent increases also contributed to annual inflation. And the cost of building new homes accelerated because of rising material and oil prices, which also drove up postal services. But fuel prices did fall in the month as the excise was halved. Regular unleaded petrol fell while diesel rose.
What these results show is that the government's decisive action to slash the fuel excise is helping to take some of the sting out of price pressures from the conflict.
But the opposition says the government's not doing enough.
Australian households are doing it tough. They're paying higher prices at the supermarket. They're paying higher prices in their mortgages.
The problem for the Reserve Bank is that underlying inflation is rising and stuck above its target band of between 2 and 3%. While the expectation is that the central bank will keep rates on hold in June, mortgage borrowers may not be out of the woods just yet.
We do still expect them to raise rates in coming months, just not in June.
And that will add further pressure on those with loan repayments.
I've got an investment property, but my rent covers it, and then it's just how much I have to top up. And if my rent was to go up in Sydney, then that would be really, really hard, but I'm hoping.
Why?
It doesn't. Because it's a lot, to live in Sydney.
Complicating the Reserve Bank's job, a prolonged squeeze on oil supplies.
We're expecting quite a bit of pass-through into core inflation from the energy price shock from the war in the Middle East, and because of tight monetary policy, we are expecting unemployment to rise.
The latest official figures show youth unemployment rising in April.
I don't have a part-time job. I've been branching out to a lot of places trying to look for a job, but it's so hard because so many places just either don't respond or they're not hiring.
Difficult decisions all round for businesses and shoppers as times get tough.
All four big banks expect the RBA to leave rates on hold at its next meeting in June. For more, I spoke to NAB Chief Economist Sally Old.
There is a little bit of signal in today's data. So as you said, the headline number a bit softer than we expected. And basically the surprises there were that groceries, particularly food, prices did less in the month of April than we had anticipated. I guess there is a bit of a sense out there, or a bit of an expectation that with everything that's happened to the price of petrol and diesel, that we would start to see some of that passed on in higher supermarket prices, and that didn't really happen in April. Now, that doesn't mean it won't happen, but I guess it means we reserve judgment until we get the next set of monthly inflation number for the numbers for the month of May.
Given the better than expected result with the headline rate, is there reason for the government to consider extending the temporary cut to fuel excise?
Well, I think the story here is that these were April numbers, and so that's when we had the full effect of the fuel excise cut. So that did help suppress, I guess, headline inflation. Now, as we know, the government said that was in place for 3 months. But ultimately, I think we've got to be careful not to read too much into these policy-induced changes in inflation, and really just focus on what we would consider to be the underlying pulse of inflation, which is really defined by those core measures rather than the headline.
Well, just briefly, could I ask, would extending the cut to fuel excise possibly help the RBA with preventing inflation expectations from becoming embedded?
Possibly. It's a little bit of a double-edged sword because on the one hand, inflation expectations have been elevated, and that's been, I think, a source of concern for the RBA because that series and that story was already in train before the Middle East conflict. So there is that aspect of it, and keeping the excise cut in place might give you some better news on inflation expectations. But I think we should also remember that there's another side to the excise the excise tax cut, and that is it basically puts more dollars into the back pockets of consumers and they will go and spend that in the economy. So, for a central bank like ours who've been worried that there's been too much demand in the economy relative to supply, that's probably one of the less desirable impacts of the excise tax cut.
Okay, well, coupled with the latest unexpected increase to unemployment, does the Reserve Bank now have the space to hold rates steady in June?
Yeah, we think that's more likely than not. They have lifted interest rates 75 basis points. They've done that 3 months or 3 meetings in a row at least. That's a reasonable adjustment to the setting of policy here in Australia. And I think the bank has basically said, look, we think in all likelihood that policy is probably a little bit restrictive at these levels. So what that means is that the setting of interest rates is exerting a headwind on the economy. And then I guess we've also got to take into account what's changed and what's new since the RBA board met in early May. And I guess we have observed, to your point, a softer labour market print. We've observed in our NAB business survey that business conditions fell in the month of April as well. But the really big change, I guess, is just, the federal budget and some of the policy changes that have been proposed and I guess, reactions to those changes.
So can I just clarify what you're saying? Because when the budget was delivered a little over a fortnight ago, many economists did judge it as slightly inflationary. You've specified there the reaction, the negative reaction that budget has received in the week since. Could that actually help the RBA in the inflation fight?
The only way that the RBA can be sure that it will get inflation to come down into that 2 to 3% target band and stay there sustainably is to get the economy to grow below trend for a period of time. And so what that means is that we need to slow growth in the overall economy. Now that can be done through rate hikes, it can be done through the impact of higher energy prices, and now it's quite possible that some of that desired slowing in growth might happen through broader sentiment effects post the budget. And so, the trick for the RBA is basically working out, what the net effect of all those three things is. But to the extent that, we actually need slower growth in the economy as a necessary outcome in order to get inflation down, I guess maybe at the margin, depending on the ultimate impact on economic activity, you might make the case that the budget has been somewhat helpful on that front.
Okay, just in summary, the rate hiking cycle, you say, isn't finished. Do you expect one more, 2 more this year?
I think at this point we expect just one more in the August board meeting, and that will take the cash rate to 4.6%.
Sally Old, good to speak to you.
Thanks very much, Kirsten.